Warning: these social media platforms may be hazardous to your health. Censorship kills. Pain coming. This has been a PSA by Breaking Spectre.
There we go. Boy, oh boy, love it when that happens. Do a little update to old OBS here, and it decides it wants to throw your mic settings net off. So, good morning, everybody. Apologize for the screwed up start here this morning, but nonetheless, it is the third day of December here. We got a lot of ground to cover here this morning. We're going to talk a little bit about the weather to kick things off here in a moment. We're going to get into what is going on by way of the market this morning. Fed admitting it has lost control. Danske Bank and talking about ESGs and what they're doing with their various funds. Inflation causing hardships for 45% of the U.S. Singapore. Power prices spike, and of course, a number of other things, global food prices, and November payrolls net out here this morning. We're going to get into all of that and more here in just a moment. We'll see you back here in just a minute.
Hey everybody, Spectre here. Just wanted to give a big thank you to all you guys who continue to support my work. Jump in, day out on the streams, support all the various pieces I put out, etc., etc. And in doing so, I figured what the heck, we'll put some merch out there if you guys wish to continue to support and help defray some of the costs of streaming, which many of you guys know many of us incur. Got a handful of shirts and ad here. Spectre Does News. We got the Realize, Real Lies shirt and that you hear on my PSA periodically. And of course the No BS insignia from the show I do over on the 5x5 channel, all of which you can get for the low price of $19.99. Aside from that, you can get the Let's Go Brandon hashtag FJB shirt as well in a variety of colors. And I've recently added the hoodies in a variety of colors you can get right there as well. And last but not least, you can grab yourself a No BS shirt and the Zip Up hoodie as well. If you don't want any articles of clothing, well, you can grab yourself a mug or a 20-ounce water tumbler if you wish. Your choice. And of course, as always, just want to thank you, the listeners, the audience, those who are in chat day in, day out. Thank you for your continued support.
All right into it we go here this morning. Weather-wise, we're not looking too terrible bad across the country here on the state side. We got a couple disturbances in the upper Midwest, up around Minnesota, Wisconsin. We got a little bit cruising through the Ohio River Valley, it looks like, and maybe a couple spotty showers net coming across down by way of Texas. If you're up in the Northeast, maybe you might get hit with a little something here a little later on in the day. Temperature-wise, not looking too bad there either. Looks like we're going to have some fairly decent weather all across the Midwest here. Hey, I'm not going to complain this time of year. Save on the old natural gas bill, especially this time of year, especially in light of what's been playing out worldwide. So right into it we go here this morning. But before I do, I want to thank everybody for joining. First and foremost, today is the first day that I'm broadcasting over to the Foxhole.app. I want to welcome the family over yonder. Finally got set up over there and now have a backup to the many other backups as well. For those that know, I've been on a couple week hiatus and that off of the YouTube side because, well, Susan doesn't like us very much. Yeah, apparently, we're just a major threat to them. All 800 of us and that congregate over there periodically. And of course, they got to go back through some old footage and that from a couple, 2-3 years ago to find any sort of faults and things of that nature. But hey, it is what it is. We'll last as long as we last, and we'll go from there. In the meantime, I want to welcome the folks over on the Foxhole here this morning, as well as all of you guys that faithfully tune in on the YouTube side, the live side here this morning as well. That being said, futures flat ahead of taper accelerating payrolls here this morning. Says U.S. equity futures were flat, rebounding from an overnight slide following news that 5 mild Omicron cases were found in New York. Woo, boy, look out. Time to get scared, everybody. And European stocks wavered at the end of a volatile week as traders waited for the latest jobs data to assess the likely pace of Federal Reserve tightening and accelerated tapering. Says E-mini S&P futures traded in a narrow range and were up 2 points or about 0.04%. NASDAQ futures were flat while Dow Jones futures were up 8 points. The dollar edged higher along with the euro after ECB President Christine Lagarde said inflation will decline in 2022. Crude advanced after OPEC Plus left the door open to changing the plan to raise output at short notice. And so there we see the E-mini S&P futures and that here this morning. Let's see, we'll get into this here in just a bit as well. In the latest U.S. data, jobless claims remain low, suggesting additional progress in the labor market. Traders are awaiting today's big event, the November payrolls numbers, which could shape expectations for the pace of Fed policy tightening. Obviously, the full preview is there. Bloomberg Economics expects a strong report, while the median estimate in a Bloomberg survey of economists predicts an increase of 550,000. And like I said, we'll get into that here momentarily. Some of the movers on the market here today. DocuSign plunges 32% in pre-market trading as the e-signature company's quarterly revenue forecast missed analyst estimates. JP Morgan and Piper Sandler cut their ratings. Marvell Technology shares rise 18% in pre-market after the semiconductor company's fourth quarter forecast beat analyst estimates. Morgan Stanley notes an exceptional quarter with surprising outperformance from enterprise networking, strength in 5G and in the cloud. Asana shares slumped 14% in pre-market trading after results, with KeyBank cutting the software firm's price target on a reset in the stock's valuation. Piper Sandler said that the slight deceleration in revenue and billings growth could disappoint some investors. Womp womp. Zillow Group shares rise 8.8% in pre-market after the online real estate company announced a $750 million share repurchase program and said it has made significant progress on Zillow offers inventory wind down. Boy, it must be nice when you do so badly with your algos and totally miss it and end up having to sell off part of your product line. But hey, we'll just reward the execs with that handsome $750 million share repurchase, because job well done. Nice job, Zillow. Stitch Fix jumped in pre-market after Morgan Stanley raised its rating to equal weight from underweight. Smartsheet rose in post-market trading after the software company boosted its revenue forecast for the full year. The guidance beat the average analyst estimate. National Beverage Corp gained in post-market trading after the drinks company announced a special dividend of $3 a share. Ollie's Bargain plunged 21% U.S. pre-market trading on Friday after the company's quarterly result and forecast disappointed, hurt by supply chain troubles. And Smith & Wesson brands stock fell 15% in post-market trading after adjusted earnings per share for the second quarter missed the average analyst estimates. Now, perhaps maybe part of that is due to the fact that they're shifting their headquarters further south to more friendly states. Might have had to take a little bit of a write-down on that, but nonetheless, that's Smith & Wesson. Aside from that here, market snapshot here this morning, the S&P 500 futures little changed at 45.74 and change. Stocks Europe 600 up 0.2% to 466.43. Nikkei is up 1% to 28,029.57. Shanghai Composite up 0.9% to 3607 and change. Brent futures up 3.3% to 71.97 a barrel. Gold spot down 0.1% to 17.6728 per ounce. U.S. dollar index up 0.14% to 96.29, and the euro down 0.1% to 1.1286. Some other overnight news out of Bloomberg. It says, I see an inflation profile which looks like a hump, and we know how painful it is. ECB President Christine Lagarde says at event Friday. She also said that when the conditions of our forward guidance are satisfied, we won't be hesitant to act. and that an interest rate increase in 2022 is very unlikely. The betting window is open in the fixed income market as hedge funds and other traders hunt for mispriced risk heading into 2022, whether it's predictions for accelerating inflation or rising interest rates. Also, the UK Municipal Bonds Agency aims to sell the first ethical bonds on behalf of local governments early next year. The body, set up to help UK councils access capital markets, is looking to issue a couple of sustainable bonds in the first quarter of 2022, according to officials advising on the sales. It expects to follow that with a pooled ethical bond to raise money for a group of different local authorities, whatever all that techno jargon means. Low-income countries indebted to Chinese commercial and policy banks could buy specially created Chinese government bonds and then use these as collateral to support the sale of new yuan debt. Zhao Shengzhen, head of People's Bank of China Finance Research Institute, wrote in an article published on the China Bond magazine. Chinese tech shares briefly touched their record lows in Hong Kong as Didi Global Inc.'s announcement to start U.S. delisting and rising scrutiny on mainland firms traded there dealt a further blow to already soured sentiment. The yuan is set to weaken for the first time in 3 years in 2022 as capital inflows are expected to slow amid a shrinking yield gap between China and the U.S., a Bloomberg survey shows. And over to Turkey, Turkish inflation accelerated for a 6-month in November to the highest level in 3 years, driven by a slump in the lira that continues to cloud consumer price outlook. Of course, yesterday, if you're with us on the show, we talked about that basically Erdogan fired his finance minister. I think this is about the third one in about as many years because, well, they need to drive the lira down. So aside from that, looking at News Squawk, back over to Asia, Astra is said to sink Advent's $7.6 billion buyout of biotech Sobi. The Bank of Japan is said to see Omicron as potential reason to keep COVID aid. Keza swap rejected, developer bond slide according to Evergrande update. And Primera is said to be near a deal for UK Blood Plasma Lab, BPL. Back over to Europe, UK November composite PMI 57.6 versus a flash reading of 57.7. The chance of a Bank of England rate hike this month has fallen, according to Bank of America's Wood. AP Muller Holding agrees to buy diagnostics company Unit Labs, and Primera is said to be near a deal for UK Blood Plasma, same as what we read before. Some other movers on the day. I've got a few of things on the old event calendar shaping up at 8:30 a.m. this morning. November change in non-farm payrolls, estimate of 550,000. Prior was 531,000. November change in private payrolls, November change in manufacturing payrolls, all that coming through. November unemployment rate estimate of 4.5% versus a prior 4.6%. November underemployment rate, prior was 8.3%. November labor force participation rate estimate of 61.7, prior was a 61.6. Also at 8:30 a.m., November average hourly earnings year-over-year estimate of 5% versus a 4.9. November average hourly earnings month-over-month, and November average weekly hours, all employees, all set to come across at 8:30. No, 9:45 a.m. we got November market U.S. composite PMI, prior was a 56.5. November market U.S. services PMI coming through as well. At 10 a.m., we'll talk about October factory orders, estimate of 0.5% versus a prior 0.2. October factory orders ex transportation, durable goods orders, October cap goods, ship non-defense ex air, and October cap goods orders non-defense ex air, all coming through at 10 a.m. And last but not least, November ISM Services Index, the estimate is 65, prior was a 66.7. So a lot moving and shaking on the markets here this morning. We'll have to keep an eye on that as that stuff comes through. But flashing back to yesterday, we get this interesting piece out of Quoth the Raven. Says the Fed admits it has lost control. Now, mind you, Yellen and Powell both have been up on the Hill in the last couple days, flapping their jaws. And of course, we found out that all this business of transitory talk, well, yeah, it was just that, just a bunch of jawboning. And it says, like any junkie with an addiction, the first step is admitting that you have a problem. It was no sooner than Paul Krugman came out less than 2 months ago declaring a win for what he called Team Transitory that Jerome Powell sat in front of a Senate panel and was forced to admit he had a problem. Surprise out of the Fed, right? And of course, Paul Krugman, for those who don't know, he's a quote unquote economist out of the New York Times. He's a bit of a hack, I would say. 3-month core inflation. Why isn't everyone calling this a win for Team Transitory? Well, anyway, Powell seemed to come to terms yesterday that he was stuck between a rock, brutal, unrelenting consumer inflation, and a hard place, the inability to raise rates or taper without fuck-tangling the entire economy and capital markets. The Fed chair admitted in front of a Senate panel yesterday that, quote, it's probably a good time to retire, end quote, the word transitory to describe inflation. And he continued, says at this point, the economy is very strong and inflationary pressures are higher, and it is therefore appropriate, in my view, to consider wrapping up the taper of our asset purchases, which we actually announced at the November meeting, perhaps a few months sooner. And that's according to CNBC. And of course, as we have talked about ad nauseum here since the beginning of the scamdemic, the Fed has been relentlessly purchasing about $80 billion in treasuries, $40 billion of mortgage-backed securities, and, they start to taper that by 5-10 billion a month here from now until probably mid-year next year. But nonetheless, it's exploded their balance sheet, as evidenced here with their total assets. Says, of course, to those of us without our heads up our asses over the last 18 months, like Jerome Powell, this admission doesn't come as that much of a surprise. I've been covering, writing, and ranting here, and here about why I believe it was obvious that the inflation we're experiencing is not transitory for months now. In fact, I would argue that the extent of the coming inflation problem has been pretty obvious to just about anybody. This makes it extra hilarious that the Fed has been hiding behind this vaudeville act of pretending they just noticed that inflation has barely nudged above their 2% target. The reality is that price hikes for the everyday American are 10%, 20%, sometimes up to 50% on products and services they need for their day-to-day lives. In addition to that, what we experience with our very own eyes and wallets, every single major consumer product manufacturer and industrial company has commented that their cost of raw materials has gone up. The American public has been so aware of inflation it has even become a part of the mainstream media narrative on both the left and the right. And consider not buying a turkey, inflation got you down, just eat less. Before Thanksgiving, they were telling us to eat bugs and forego turkey this year, because inflation, and chances are you probably can't afford it. Idiots. Inflation has been out of control for years now. You know it, and now nobody can say it. The Fed doesn't know it. In addition to relinquishing the quote-unquote transitory term yesterday, Powell even indicated to the Senate panel that accelerating their taper and considering rate hikes were on the table. Now, this is especially bold language in the face of the newly discovered Omicron variant, which I predicted days ago would give the Fed a perfect excuse if they wanted to continue quantitative easing. Says, well, I happen to think this will be the Delta variant part 2, in that it drums up a lot of hysteria and everyone eventually ignores it. That doesn't mean the government markets won't overreact to the news. Gee, what do you think has been happening over the course of the last week since this is drummed up? Exactly that. Hysteria, overreaction, ridiculousness, or perhaps even insanity. Remember, scary sounding words like mutation, spike protein, and variant are a prompt to act like hysterical hyenas and usurp power unilaterally for those on the left side of the aisle. Read our entire government right now. But based on Powell's testimony yesterday, it looks like the problem of high prices is going to take precedence over using Omicron as another crutch to push a socialist, modern monetary theory agenda, at least for the time being. Helicopter money for everybody, and hey, you don't have to worry about that silly thing called debt. We're good for it. Everybody will accept our dollars, right? And while uncertainty surrounding Omicron is part of the discussion, markets plunged on Tuesday of this week, mainly because of the verbiage Powell used when describing the taper and potential rate hikes, in my opinion. The only question now is whether Powell has the stones to stand by his hawkishness. So, bottom line, we'll break from that there. As mentioned here, they're caught between a rock and a hard place, but they're a victim of their own making, right? At the end of the day, we know this Fed fiat currency crap will have to end. The party's going to be over. All this business of stock buybacks and everything else is going to come crashing down. And another article that I had didn't bring in here today, but another good piece from Economic Collapse blog says, what do they know? Insiders are dumping stocks at the fastest pace in history. Why do you suppose that is? You think they know what the gig is up? Probably. So aside from that, Danske Bank slaps ESG label on 95% of its funds as top banker speaks out against greenwashing. So this is the other side of things as they decide to go down this mass monetary theory garbage. Of course, it's going to be extremely tough for you and I or anybody to get any loans in the future unless, of course, you somehow have the ESG business attached to it. So Dansk just got smart and says, you know what? Screw it. We'll just label everything ESG. 95% of our offering. Perfect. And we talked a little bit about yesterday on the show the fact that Con Edison up in New York just came out with their brochures, green this, green that, and basically, well, that's only for 20, 30 years out. Oh, okay. So how do we hold those folks accountable again? Oh, we don't. Because obviously the top brass net will have already moved on, and 30 years from now, we'll forget all about those comments we made back in 2021. Anyway, one of the most disturbing developments on Wall Street in recent years is how the green cult has managed to infiltrate the culture, forcing firms to drum up ESG branded offerings or risk losing clients to better prepared rivals. By like any other fad, the shift to ESG and the pressure investors are putting on dirty oil and gas companies, not to mention coal, has had side effects that are more serious and others that are more or less benign. Says in the serious blowback camp is the fact that the backlash against traditional energy companies and the new orientation in Washington has helped drive inflationary pressures to their highest level in 3 decades, and by weighing on U.S. supplies of crude oil. The truth is, there simply aren't enough truly green assets to go around, which is why Wall Street is scrambling to label any old company green based sometimes on little more than promises. Just look at the top holding of 2 of Wall Street's biggest ESG funds. We got SUSE, BlackRock, iShares, USA ESG Select, and SPY here. Oh, look at that. Apple and American Express, BlackRock, Facebook, Alphabet, Home Depot. How many statements have you seen out of any of these companies saying, oh, we're going to green this and we're going to be held to account and, oh, this is 20 years out and this, that, and the other? Yeah, I haven't either. Says who knew Apple and American Express were paragons of carbon neutrality. Above all, green bonds are supposed to create new incentives for borrowers by allowing companies that meet green requirements, at least on the surface, to issue debt and borrow money at slightly lower rates. But this also presents serious risk of mispricing. The universe of ESG has grown so fast that it now encompasses 33% of total U.S. assets under management. And here we see that depicted graphically. It says not everyone is okay with this rapid advance, even some of those who started to profit from it. Critics include senior officials at banks that are deeply involved in the business. Danske Bank's top ESG banker spoke to Bloomberg a few days ago about the risks inherent in the explosive growth of ESG branded assets, especially loans and bonds. The banker, Samu Slot, warned about an epidemic of greenwashing in the global asset management industry. There are clear risks. As things stand now, he said, there is room for improvement. But one banker's lack of self-awareness isn't stopping Danske Bank from engaging in some ESG-related skullduggery of its own. The bank just announced plans to recategorize the vast majority of its funds, lumping them into the ESG category by simply adding a label. Pretty simple. See how that works, everybody? Says the bank announced its plans in a statement to the press released Wednesday, and it's not just a handful of funds. This month, more than 130 funds across Dansk Invest markets will be classified as ESG funds, and 10 as funds with a sustainable investment objective. Whatever the hell that means. Some fancy corporate speak, I'm sure. Nobody will really check into that or hold them to account. Dansk will use definitions from Articles 8 and 9 of the EU's Sustainable Finance Disclosure Regulation. After recategorization, about 95% of all Dansk Invest funds will be either ESG funds or funds with a sustainable investment objective. See how that works, folks? If you just rebrand it, relabel it as such, then it is so. Now, this would suggest that Slata is already behind, since he told Bloomberg the other day that he expects 75% of large corporate loans to have some kind of a sustainable component. At Dansk, the number of products carrying the ESG tag is closing in on 100%. ESG assets are already worth $35 trillion. Investors are already signaling that they prefer a more detailed explanation of a company's ESG bona fides rather than the more general outlines preferred by the sell side. Even now, companies that don't meet their climate-focused objectives, in the business they call these objectives KPIs, can be expected to see borrowing costs surge. But if this were to happen all at once across a range of borrowers, this could potentially be a major risk to holders of ESG bond funds. So I would expect, folks, that we're going to see a lot more of this greenwashing as we move forward in weeks and months ahead. It's all a sham. And as we talked about COP26, it's a lot of bloviating, a lot of hot air from these folks, no commitments whatsoever, just as COP of the past. And it's all the same here with the banks does. Anyway, insanity. And so inflation is causing hardship for 45% of U.S. households, lower income Americans most affected, according to Gallup. By Mohammed Yunus over at Gallup, he says, as the peak of holiday shopping approaches and winter temperatures drive up heating costs across the U.S., 45% of American households report that recent price increases are causing their family some degree of financial hardship. 10% describe it as severe hardship affecting their standard of living, while another 35% say the hardship is moderate. So, lower income, less educated Americans most affected. Lower income households are most likely to have experienced financial hardship due to price increases. 71% of those living in households making less than 40 grand a year say that recent price hikes have caused their family financial hardship. That companies with 47% of those in middle-income households and 29% in upper-income households. Moreover, 28% of lower-income Americans describe the hardships they are experiencing as severe and affecting their ability to maintain their current standard of living. And here we kind of see this broken out here by household income, less than 40,000, 40 to 100,000, 100,000 or more, severe to moderate to total or no hardship whatsoever. Education degree, party ID, yeah, we always got to throw that in there. Says these results are from Gallup's November 3rd through 16th probability-based web panel survey. Says while the majority of U.S. adults without a college degree, about 54%, describe price increases as causing financial hardship for themselves or their family, 30% of those with a college degree say they have experienced the same. There are modest differences in inflation-related hardship along partisan lines, with Dems 37% less likely than Republicans at 53%, or independents at 49% to say they have experienced it. However, similar percentages of Dems at 8%, Republicans at 11%, and independents at 11% say they are facing severe financial hardship because of higher prices. So the bottom line, as Americans sail into peak holiday shopping season and winter temperatures bring bigger heating bills to much of the country, nearly half of U.S. adults already report that price increases are causing them financial hardship. Now, for most, the problem is not a crisis, but lower-income households are feeling the impact more than others, with nearly 3 in 10 saying the hardship is severe enough that it is affecting their current standard of living. Rising prices are expected to persist, meaning more Americans are likely to report hardship, and those most vulnerable are likely to see things get worse before they improve. And again, what does this all link back to? Inflation. Obviously, the Fed printing dollars left and right since the beginning of the scamdemic. What do you expect? The Fed is the problem. Period. It's time to do away with it. And the Fed. So aside from that, and along those lines, we've talked seemingly ad nauseum here on the broadcast about what's been going on with energy prices and lack thereof all across the world. Singapore power prices spiked 1,290% as energy crisis emerges. The global energy crisis continues to worsen with its latest victim, Singapore. Power prices in these Southeast Asian countries saw a dramatic surge in wholesale power prices. And according to Bloomberg, provisional uniform Singapore energy price jumped Singapore dollars 4,499 or about $3,293 per megawatt hour, the highest on record, or about a 1,290% jump in the last few days. And just on Tuesday, prices were at Singapore 323.61 or about $236. Holy moly! There we see that major tick up on the old charts there. Says the dramatic price increase in wholesale power reflects the persistent global energy crisis. It doesn't help when 95% of the country's electricity is generated by burning natural gas. All the natural gas is imported from neighboring countries. It says with the Northern Hemisphere winter just weeks away, Singapore's electricity prices are likely to remain elevated as natural gas demand continues to strengthen across Europe and the rest of Asia, due in part to La Nina conditions producing unseasonably colder trends. Now, there's word that limited gas supply from Indonesia has already resulted in turbine trips or emergency shutdown of power generation turbines at some Singapore power plants. Julius Wiratno, deputy for operations at Indonesia Oil and Gas Regulator, SKK MIGAS, told Bloomberg that gas flows from Indonesia to Singapore are at a minimum demand levels as supply is limited. Says almost all the independent retailers were forced out of the market, leaving a significant number of consumers previously on fixed price tariffs at the mercy of the spot market, Whistler said. Singapore has resorted to bringing back combined cycle gas turbine capacity in the event of more turbine trips to mitigate a collapse of its power grid. A spike in power prices might not have a tremendous impact on households, considering a majority of them are under fixed-rate contracts. Still, it could unleash pain for companies that tend to be on variable contracts. Considering Singapore's power grid is mostly powered by natural gas, we suspect this is not the last we'll hear about soaring power prices as winter fast approaches. We first noted the energy crisis was going global back in September. And boy, howdy has it. We've talked about coal in China, we've talked about coal in India, we've talked about natural gas supplies across Europe, with Gazprom, of course, with Nord Stream and that being, blackballed and regulations not being approved coming through Germany, all that crap going on. Obviously, they're wanting to sow this winter of discontent real bad across the world, and we're seeing it play out. So aside from that, global food prices rise again, hitting new decades high. This out here this morning says global food inflation continues to rise for the fourth consecutive month in November, reaching levels not seen in a decade, led mainly by robust demand for wheat and dairy products, according to a new report via the Food and Ag Organization of the United Nations, or FAO. FAO's Food Price Index, which tracks monthly changes in the international prices of food commodities, rose 1.2% to 134.4 in November from October, driven by continued demand for food. The index is up 27.3% year over year. Here we see that depicted on the graph at levels not seen since, what is that, clear back to about 2010, 2014 time frame, I suppose. Said food prices remain at a decade high and have risen sharply since the beginning of the pandemic, driven by snarled supply chains, harvest setbacks, soaring farm costs, and high demand. Last month, increases in grains, dairy, and sugar were the primary driver in FAO's food price index. Laggards were meat and vegetable oil. And here we kind of see that on their graphs. And says the FAO's cereal price index averaged 141.5 points in November, up 3.1% from October and 23.2% from the same month last year. Wheat prices are at their highest levels since May of 2011 due to adverse weather conditions in Australia and potential changes to export rules in Russia. The dairy price index rose 4.1% to 125.5 in November. Compared to last year, the index is up 19.1%. Strong global import demand persisted for butter and milk powders as buyers sought to secure spot supplies in anticipating of tightening markets, the FAO said. Sugar prices averaged 120.7 points in November, up 1.4% from October, reversing most of the previous month's decline. Compared to last year, prices are up a stunning 40%. Vegetable oil and meat prices were slightly down in November, but were both up substantially over the year. The question central banks, governments, commodity traders, and households have on their minds is when do food prices reverse? To answer that question, Judy Gaines, the president of J. Gaines Consulting, recently told Bloomberg that rising food prices should continue into the second half of 2022. Says we're not seeing a turning point just yet. We'll probably see it, my guess is, in the middle of next year. There's a point where high prices are the best cure for high prices. There's a point where it's going to have to resolve itself, Gaines said. She pointed out that rising prices were due to a combination of factors such as caps on migration, red-hot labor market, labor shortages, adverse weather conditions, snarled supply, higher fertilizer prices, and soaring transportation costs. Gaines said the end to several major droughts and increased rainfall in major producing regions means global food production in 2023 and 24 will be much improved. With at least another year or more of food inflation, Cargill CEO David McClellan recently changed his mind about the transitory inflation and now believes it will be more persistent, with higher food prices in 2022. He blamed elevated food prices on snarled supply chains, labor shortages, and adverse weather conditions, among other things. And of course, Federal Reserve Chair Jerome Powell had to retire the word transitory regarding the inflationary environment in an embarrassing move this week. Soaring food prices are unlikely to reverse in early 2022 and are crushing emerging market consumers and the working poor in developed countries. Almost 1 year ago, SocGen's Albert Edwards pointed out that rising food prices would lead to discontent and social instabilities in the weakest countries. But think back to the early part of the decade, I suppose, in the early 2010s. What played out in the Middle East? You guys remember? What was the actual cause of the Middle East uprising? Was it not a similar case of what we're seeing play out here right now? You think they're trying to sow those seeds still? Of course they are. That's what they do, right? So anyway, aside from food prices, we get to the November payrolls here this morning. We talked about the ADP print on Wednesday. How did this fare? Well, November payrolls, huge miss. Only 210,000 jobs added, but unemployment rates tumble. Says with the median Wall Street economist expectations of a 550,000 print, just slightly above last month's 531,000, and whisper numbers of 564,000, any number that came at or above and wasn't a huge miss would be seen by the market as validating the Fed's accelerated taper, which could be announced as soon as December 15th. Alas, it was not meant to be, because moments ago, the Bureau of Labor Statistics reported that in November, the U.S. added just a tiny 210,000 jobs, down a stunning 336,000 from October's upwardly revised 546,000, and the smallest monthly increase since December. And there we see the puny numbers right there on the graph. It says, needless to say, this was a huge miss to consensus expectations of 550,000, and coming in at less than half the expected number, the actual print was a whopping 5 sigma miss. So yeah, they got it just a little wrong. Mind you, we talked about the other day from ADP, the numbers net up, and up across most major sectors. And of course, yesterday we talked about the fact that people were not on the government take, as it were, and there are jobs aplenty. So what's going on here? It says with the November gains, total payrolls remain on the some 3.9 million or 2.6% from its pre-pandemic levels in February 2020. And there we see that depicted graphically there. So still, as CNBC's Steve Leisman notes, this number does seem suspect, and the reason is because, as Goldman noted overnight, the BLS has revised up each of the prior 6 payroll reports, including 235,000 with last month's release. It is thus probable that this month will also be revised higher, especially since the BLS revealed that the change in total non-farm payroll employment for September was revised up by 67,000 from 312 to 379,000, and the change for October was revised up 15,000 from 531 to 546. Says with these revisions, employment in September and October combined is 82,000 higher than previously reported. So yes, the upward revisions continue, and chances are we'll probably see that. Says adding to the confusion is the household survey found employment rose by a whopping 1.136 million, up from just 359,000 last month, a substantial divergence from the more closely watched establishment survey. So more details out of the BLS says workers were unable to work due to bad weather, came in at 37,000. Historical average for November is about 74,000. Another 163,000 workers who usually work full-time could only work part-time due to weather last month. The number of persons employed part-time for economic reasons was at 4.3 million, changed a little in November. The number of persons not in the labor force who currently want a job was 5.9 million in November, little changed over the month, but up 849,000 since February 2020. Perhaps the bigger story was the plunge in the unemployment rate, which tumbled from 4.6 to 4.2%, beating estimates of 4.5%, and coming below the bottom of the range of 4.3 to 4.6. So how exactly does that work again, given these numbers? People just not signing up for unemployment? I don't know. Let's see, flashing forward here, I'll skip ahead a little bit. There was some more disappointment on the wage front with average hourly earnings at 4.8%, missing expectations of 5% year over year, and that from a downward revised 4.8% in October. Aside from that, let's see, we'll skip ahead here just a little bit more. Indeed, as Bloomberg analyst Katia Dmitrieva notes, lots of data in this report point to the structural shifts in the workforce and a clear gulf between workers and employers. It says number of people not in the labor force but who want a job remains about 850,000 higher than pre-pandemic. Long-term unemployed jobless for about 27 plus weeks is at 1.1 million higher than pre-pandemic and barely budged in November. The number of people working part-time but wanting full-time remains at 4.3 million. It says yet, as some noted, today's data may be completely meaningless and comparable to the February 2020 report when the world was going into lockdown, but employment data didn't show it yet. With Omicron having arrived, and it's just a matter of time before it imposes a new round of lockdowns, today's data sadly tells us nothing about how bad the U.S. economy is about to be hit in order to make it easy for Biden to rush out a new round of trillions in stimmies. So there's that as well. Who knows? You know, they're job owning and saying, no, they're not going to lock the stuff down, all this and that. Pray that they don't. Hopefully the people are wise enough to see through all the hype, the garbage, the fanaticism, the surrealism, and everything else that the media is trying to push. And for what? For what? Something that barely will make you sick? You know, how many stinking governments and entities around the world have basically said, hey, this thing's going to be around with us forever, and it's, worse than a common cold, right? So we got to go into complete fear porn and that out of the Mockingbird media and lock things down again? Boy, howdy, let's hope not. So aside from some financials here this morning, This out of big league politics, as George Floyd's nephew was arrested for intimidation of Kyle Rittenhouse jurors. And surprised it takes this long. Yesterday or day before, we talked about the video finally released of the roadside escapades of NBC being pulled over. They gave the camera footage and everything else. Why didn't they roll that out at the time? Why do we got to wait a couple weeks for all this to finally work its way through? Anyway, this is a man who's been identified as both a relative, close friend, and nephew of the deceased George Floyd, was arrested sometime on Thursday for alleged intimidation of jurors assigned to Kyle Rittenhouse's homicide trial, having previously threatened to publicly identify jurors and expose them to violence and harassment. Cortez Rice was reportedly arrested Monday in accordance with a warrant accusing him of communicating with jurors. The leftist militants immediately proceeded to raise money for Rice's bail. Gee, there's a shock. And of course, per Andy knows, says Cortez Rice, a relative of George Floyd, who recorded a video saying he knew of people with cameras in the courtroom during the Rittenhouse trial, has been arrested for reportedly making contact with jurors. He's jailed in Waukesha County, far left trying to raise 50 grand for him. Maybe we can help to support that campaign. Says it's unclear at this time of Rice being arrested for threats made in his video uploaded during the Rittenhouse trial or subsequent jury intimidation following Rittenhouse's acquittal. Considering Rice's warrant alleged communication with jurors, it's possible Rice either encouraged or communicated with jurors themselves subsequent to the trial. Now, Cortez Rice, who has variously been identified as an associate and relative of the armed robbery convict Floyd, previously threatened to identify Rittenhouse jurors during the trial in a social media video. I'm sure many of you guys probably remember that. Says, I ain't even going to name the people that I know that's up in the Kenosha trial, but it's cameras in there. It's definitely cameras up in there. There's definitely people taking pictures of the juries and everything like that. We know what's going on, so we need the same results, man. We need the same results, said Rice in the video. Rice's threats were followed by a jury intimidation attempt on the part of MSNBC, which tasked an operative to follow a jury bus and photograph the license plates of jurors assigned to the case. Rice previously filmed himself bragging about entering a building where a Minneapolis area judge lives in an act of judicial intimidation in defiance of democracy and an independent judiciary. And we'll let this play through.
It's tight on her ass, we on our heels. What she think is sweet, we want cameras in the courtroom. The people deserve to know what's going on. I'm just doing some shares right quick. Why she think it's sweet, right? She think it's sweet, sweet. She think it's sweet, sweet. I don't know if this is her crib. I think this is her crib right here. We got confirmation that this is her house right here.
So anyway, we'll take a pause on that. I think many of us have probably already seen this, but Floyd himself has been largely coronated as a god among progressive liberals, with New York City's government laying down the hammer on a man who dared to protest a Floyd statue in an act of defiance to authoritarian anarcho-tyranny. And of course, many of you probably also recall that God won't be mocked. And of course, the idiots that decided to put murals on the side of buildings recall what happened to that. A little lightning strike kind of blew that all to smithereens. But yeah, interesting that they're just now getting around to making the arrests. And of course, for the very few cases around the country where we actually see justice play out, obviously it's great to see that the jury's got it right. Doesn't matter that the Mockingbird media was pushing this narrative or what have you. Screw them. Let justice play out as it should. And they should be in favor of that rather than all this court of public opinion business, right? And that's exactly what they want. They want to foist this narrative on us and say, thou shalt, and forego any facts, any of that stuff. So aside from that, on the morning, Biden admin reaches deal to restart the Trump-era Remain in Mexico program. That's a piece out of Human Events here yesterday. Says the Biden admin reached a deal with Mexico to restart the Trump-era Remain in Mexico program, according to U.S. officials. Now, as reported by the Wall Street Journal, the admin expects to begin sending migrants back to Mexico beginning on Monday while they await asylum consideration. President Trump introduced the program, formerly called the Migrant Protection Protocols, in 2019 amid heightened border crossings, and after the policy was introduced, the surge slowed. The Biden admin is restarting the program, which Biden called dangerous and inhumane during his 2020 campaign, to comply with an order by a Texas federal court that said the attempt to halt the program was unlawful. The program will exist alongside Title 42, a separate Trump public health policy allowing the U.S. to quickly send migrants back to Mexico without a chance for asylum. U.S. officials said they would give priority to Title 42 and will only put migrants into the Remain in Mexico program if they can't be sent back using the public health authority. U.S. officials also stressed they've made several changes to the program in efforts to make it safer for migrants. Migrants exempted from the program will be expanded to include elderly, physically or mentally disabled, and lesbian, gay, bisexual, or transgender migrants who could face discrimination in Mexico. So, who does that leave left? Anybody could possibly claim to be any of those, right? Seems that they've got some holes in their process here. But anyway, it's a start. And who's behind that? Is that Kamala? Our quote unquote borders are? Where is she anyway? Oh, is she still having some people cut and run from her cadre of folks that surround her? Yeah, I mean, she's real great. So aside from that, Judicial Watch had this piece out. It says, Judicial Watch, friend of court brief, Supreme Court should overturn Roe versus Wade. Obviously, this is being discussed over at the SCOTUS here. Judicial Watch announced that it filed an amicus curiae brief with the Supreme Court in favor of overturning Roe versus Wade. The brief was filed in the Dobbs case, being argued today before the Supreme Court. Judicial Watch brief, filed in support of the constitutionality of Mississippi's Gestational Age Act, argues that states have the right under the Constitution to regulate abortion and protect unborn life. This is in the Dobbs versus Jackson case number 19-1392. Says in its brief, Judicial Watch argues the Supreme Court should overturn Roe and restore the regulation of abortion to the state. Despite creative judicial legislating, it is crystal clear that abortion does not involve war, peace, negotiation, foreign commerce, or taxation. Abortion fits squarely into the state's sphere of objects that concern the lives, liberties, and properties of the people. Not being an enumerated power, the Roe Court did not have the authority to overturn the abortion laws of the states. And additionally, Judicial Watch notes that Roe v. Wade didn't provide clarity, but instead muddied the waters. Far from creating a national consensus, Roe threw the states into a 48-year contentious legal battle. Even some abortion advocates eschew the injudicious method of federalizing abortion as short-circuiting a naturally evolving jurisprudence under state laws. As federal and state judges attempt to apply this court's precedents, a national landscape of inconsistent, inconclusive, and untenable rules have emerged. As a national policy, abortion jurisprudence is, in a word, a mess. Stubbornly holding on to unconstitutional precedent will never have a positive outcome. It is time to return abortion policy to the states where it belongs and where the democratic process can effectively work. States must be able to defend life, and the disastrous Roe decision has upended our constitutional order, said Judicial Watch President Tom Fitton. The Supreme Court has a chance to right a constitutional wrong in a way that will allow Americans again to protect the right to life. And so I would tend to believe that Mr. Fitton probably is in agreement, especially with what Texas has done. And of course, we saw all the gnashing of teeth and everything else that took place as Texas took control of that situation. And frankly, it was probably the right thing to do. It should never have been at the federal level. And who are they to determine the right to life? I think that here recently that PragerU put out a pretty good piece by way of 5 ethical questions that need to be asked. And if you haven't seen that, I would recommend you go find it and listen to it. So anyway, we still wait to see all of that play out as well. Let's see. Also this morning, Oklahoma Governor AG sues the Defense Department over vaccine requirement. This out of the Military Times, and we know that there's been obviously an ongoing flap and resilience and resistance of the military in certain spots to adapt and go along with these mandates. And we get this as Oklahoma's Republican governor and the state attorney general filed a federal lawsuit on Thursday challenging the Defense Department's COVID-19 vaccination mandate for the Oklahoma National Guard. This is in a statement. Governor Kevin Stitt argued that the Biden administration's Defense Secretary, Lloyd Austin, overstepped his constitutional authority by subjecting the National Guard to the mandate, which applies to active duty military members. This week, Secretary of Defense Lloyd Austin declared his intention to proceed with unconstitutional punishment that individually targets Oklahoma National Guard soldiers and airmen, including withholding their pay, Stitt said. The Pentagon couldn't immediately be reached for comment Thursday on the lawsuit. Stitt had asked Austin to suspend the mandate for the Oklahoma National Guard and directed his new adjutant general to assure members that they would not be punished for not being vaccinated. However, Austin rejected that exemption and said any National Guard members not vaccinated against COVID-19 would be barred from federally funded drills and training required to maintain their Guard status. Stitt said that although National Guard members are paid by the federal government, he remains their commander-in-chief under federal and state constitutional and statutory law unless the president orders their mobilization. Aha! Did you notice what he said there in that previous paragraph? He rejected the exemption. Obviously, they would be barred from federally funded drills and training required to maintain their Guard status. Now think back constitutionally. What are our National Guard? Are they supposed to be federalized at this point, or are they more or less for the states and the sovereignty of said states? So is that necessarily a bad thing? Could this potentially set a trend? I don't know. We'll have to see how this plays out. But on the surface of this, I don't think that's necessarily a bad thing. And he's absolutely right that the governor is the commander-in-chief of the National Guard at the end of the day, not Biden. And you got to remember that a lot of that stemmed from clear back in 44's tenure, the federalization of a lot of the National Guard. And so perhaps this would start to undo that. So we'll have to see how that shakes out. Last but not least on the morning, the dawn of global totalitarianism, this pivotal moment out of 21st Century Wire here, says by now it should be abundantly clear the proposed global rollout of vaccine passports has nothing to do with your health. Vaccine passports are a Trojan horse being used to create a completely new type of controlled and surveilled society, a cold and calculating technocracy where the freedoms we enjoy today will become a distant memory. If those freedoms are a priority, then perhaps it's time to stop this elite plan in its tracks. So I'm going to play just a little bit of this. This is a little bit of a long piece here, about 17 minutes. I'll drop the link out there in chat for you guys if you wish to watch it in its entirety. Let me do that here real quick. Check that out there. And let's see, drop that over there as well. But anyway, I'll play a few minutes of this, whet the appetite, if you will, and you guys can watch that at your leisure later on.
We all know that we're living through challenging and troubling times. We're in the midst of a pandemic. Cities and whole countries are being locked down for months on end. People are losing their lives, their jobs and their businesses. Mental illness and suicide are on the rise, and the debt that is being built up will take generations to pay off. Censorship and polarisation seem to be the new norm, with nuanced debate and mutual respect giving way to a pro versus anti, with us or against us mentality that has a chilling and deeply divisive effect on our previously open and tolerant societies. But far more disturbing than any of these troubling things is that we stand on the brink of a civilisational change that is so far-reaching in its consequences and so profound in its implications that few are able to discern the imminence of the danger or to fully comprehend the Rubicon that we are about to cross and the dystopian world that awaits us on the other side. How is this fundamental change being ushered into being, you ask? Through sleight of hand, through misdirection, and through the introduction of the seemingly benign vaccine passport. Such a claim seems extraordinary, and you would be right to be sceptical. But please allow me to explain. Most of us living in democratic societies today have been born into freedom. We've simply never known anything different. Now, liberal democratic societies are certainly not perfect, but we are essentially free to live the lives we choose, go where we please, and behave as we wish, except where our actions are expressly prohibited in law, such as stealing, committing acts of violence, or taking another's life. But we've not earned the freedoms we've enjoyed. They've been handed down to us by successive generations who wrestled them from the hands of monarchs and tyrants, who campaigned, fought and died so that we could enjoy the freedoms that we now possess to live the lives we choose. Yet today we stand on the brink of having these priceless, hard-fought freedoms stolen from us as we look the other way, of relinquishing them without resistance or debate because we are told we have no choice but to accept vaccine passports if we want to get some semblance of our old lives back. At first glance, accepting vaccine passports into our daily lives may seem like a trivial change. After all, many of us have already become accustomed to scanning QR codes as a condition of entry into restaurants and shops. But do not be fooled. The universal adoption of vaccine passports is not a trivial change. It is no less than a fundamental inversion of what is meant by freedom in democratic societies, and it will facilitate a radical restructuring of our civilization. No longer will your personal freedom be expansive, constrained only at the periphery by long-established and mutually agreed laws. Instead, what will remain of your freedom will be limited to those things that you've been given explicit permission to do by some unseen algorithmic power mediated through the screen of your smartphone, one green tick at a time. Let me say this again, for it is critically important to understand. Today, we are essentially free to do anything we choose except where our actions are prohibited in law. However, after the introduction of vaccine passports, that concept of freedom will be consigned to history, replaced by a completely new system in which you will only be allowed to do the things that you've been given explicit permission to do. This is what I mean by a fundamental inversion of freedom. Almost overnight, our
I guess I'll pause from that there. Like I said, I'll drop the link out there. You guys can check that out at your leisure. By the way, who's ready to sign up for all that? You? Me? Oh, hell no. Of course not. I've talked quite a bit about that in the past. Obviously, you probably will not be able to find pieces like that over on the YouTube side. However, if you get over to my other platforms net where I've got some of my shows uploaded over on Rumble, over on Gab TV and UGEtube, you can find some of that there. Talked about that here recently, probably within the last month or so, with the Bill Gates related stuff and how this stuff is rolling out with Aadhaar and the pitfalls of it and everything else along those lines. This dystopian world, utopian world that they would love to roll out and are trying to roll out right underneath our noses. Obviously, this is a point where we need to fight back vehemently against all this crap. We're not going to tolerate it. And all this obviously has to do with Davos, World Economic Forum, Klaus Schwab. You've heard me talk seemingly ad nauseum about all this stuff. You guys are well in the know on that. But again, yet another good piece here. I would encourage you to check that out. That being said, that's going to do it for the broadcast here this morning. Apologize, I didn't realize that my stuff was not coming through. Remind me never to shut down my stinking software again. I don't know what the heck happened overnight here, but apparently had a little hiccup there. But nonetheless, appreciate you guys tuning in. As always, we'll be back here again on Monday, same time, same place. And also this afternoon, you'll be able to catch me over with the folks over on WTPI. We'll kick that off here this afternoon. What is it, about 4 p.m. Eastern here, right here on the channel. So appreciate you guys tuning in. Thank you to you guys over on the Foxhole. Many of you guys who have donated here today. Quick spin through that. Looks like Dondo, Daisy Chains, and let's see, Carrie Lake. A few of you guys, Friendly Gator, appreciate you guys, your contributions in that as well. And to all the rest of you guys over on the D Live side, East Tennessee Patriot Jeans, Pretty Pups, all you guys that faithfully join day in, day out. And again, I want to caution you, remind you that, hey, in the event that I get deplatformed one more time off of YouTube, make sure that you're over on the backup platforms, over on D Live, over on Twitch, over on Foxhole, wherever. That's where I'll be from here forward. So that being said, take care. God bless. We'll see you guys later on.